Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, quick look at the daily chart, S&P 500 E-mini futures. This is the daily. We did the 88.75 high, and for a period of about 3 sessions, we just could not get over that area. We could not print 89 or do any better, and eventually the weight of that becomes too heavy, and it's time to go and do a pullback, which we've done for the last 3 sessions. What we are seeing here today, to me, and it's a first day that probably some people are back, I don't expect a return to full, normal volume, whatever we call normal volume these days, until probably next week or the end of this week as we get into the jobs report on Friday. What we are seeing in Globex are 2 very important things. First of which is that the green line there, which is the Bollinger Band on the daily chart, the 20-day simple moving average up at 47.23, is resistance. If it remains resistance for the entirety of the session today, that will place us in sell rallies mode. If we close above it, then we begin to look at the Globex low from tonight, which is 2036.5. This is a 15-minute chart. 2036.5 was the floor that we identified. It's been on our chart since around December 18th, December 19th. When we made the low at 2028, here's a look at the pertinent period of time. This is December 18. Here's 2028. 2028 floor is confirmed here. We broke out, we retested, and we made a higher low at 2037.5. Here's 2035.75. So we called 2036.5 a floor and a higher low versus 26. We broke out from there, and then we really started to flatten out. And then we moved a little higher and eventually went up and did the highs. So back to the current time, what we've done in the overnight is we've come down in a series of lower highs. The bears have set themselves up very well here. They've got resistance, the green line at the middle band all night long, but they have support at 36.5. They need to take out 36.5. If they're able to take out 36.5, then you start to look at 2028, which was the area, the key area below that, and really the area, the 2028 test and hold started the push up to 2088. Okay, so right now, a break of 36 will let the bears retrace that entire last 60 handles on the move. Now, before we get too bearish, let's go back to the daily chart. Here's a zoomed out look at the daily chart. And you can see that anybody with a pair of eyes can see that we are in an uptrend. We did the test of the 200-day exponential moving average. We touched it, we tested it, we stayed below. They tried, they had their chance to make it resistance, and they couldn't. All of that needed to happen calendar year 2014. And I was telling anybody that would listen, at least my, subscribers in here, that we really did need a test of that area if these people that are so bullish wanted to go see these higher areas. So we bounced off it and we made a new high up at 2088.75. Now after the 2088.75 high, we've pulled back again. So we make this low, we make a higher low. We made new highs here. You make a higher low, we made new highs. Now, what is this more likely to be? Is it more likely to be yet another higher low, or is it more likely to be some cascading disaster which pulls the markets down, in infinity, which is what you'd read from, anybody on Twitter that would have you listen? I think it's much more likely that we're going to make another higher low and go do another higher high. Eventually, that plan isn't going to work out. I understand that. But as a trader, you need to at least align yourself with the higher percentage outcome. And the higher percentage outcome is that this is yet another going to be another higher low. Whether that higher low is 36.5 or not remains to be seen. We have a potential higher low. Whether that's the higher low or just the low of the moment remains to be seen. But it's far more likely that somewhere between here and the last higher low at 61.5, we have a buyable dip that can turn into a very nice long for a breakout over 88.75. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. New month, new year. If you're trading this stuff by yourself, don't do that. Come check us out. Come take a trial. See if we can help you. We would love to meet you. A lot of great people in there. 2014 was a huge growth year for us, and we're just doing our thing, and we're going to keep doing our thing. No egos, none of that stuff. We just setups and risk, and keeping you guys out of trouble. And if you want to come check us out, we would love to have you. Okay, I'll be back tomorrow morning with another webcast. Trade them well.